Okay, picture this. You wake up tomorrow, and out of nowhere, a sudden illness or maybe an unexpected injury completely prevents you from doing your job. In an instant, you aren't just worried about your physical recovery, right? You're immediately hit with that crushing anxiety of a lost paycheck. Well, let's dive into this explainer and tackle exactly how to navigate that sudden reality in the aloha state.
It's a pretty terrifying question, isn't it? How would you actually pay your bills if you got sick tomorrow and couldn't work for weeks? I mean, for most of us, missing even a single paycheck can create this massive financial domino effect. But before the panic sets in, you need to know that Hawaii actually has a critical safety net built specifically for this exact scenario.
And this is exactly how that safety net works. Hawaii's Temporary Disability Insurance, or TDI, is designed to be your financial bridge. Basically, if you qualify, this program can step in and replace 58% of your average weekly wages. For the year 2025, that caps out at a maximum of $837 per week. It is quite literally a vital lifeline that keeps the lights on and the groceries stocked while you just focus on getting better.
So, here is our quick roadmap for today. 1. An intro to Hawaii TDI. 2. Checking your eligibility. 3. The application process. 4. Overcoming hurdles. 5. What to expect after. And 6. Resources and final tips. Let's get into it.
All right, Section 1, Intro to Hawaii TDI, the basics.
You've probably walked past that official disability compensation law poster 100 times in your break room or HR office without even really seeing it. But here's the thing, Hawaii is actually one of only a handful of states in the entire country that legally mandates employers to provide this temporary disability coverage to their eligible employees. So it's not some corporate perk, it is a required protection under the law.
Now, we definitely need to clear up a massive misconception right out of the gate. TDI is strictly for off-the-job injuries, non-work-related illnesses, or pregnancy and childbirth. So if you slip and fall at the supermarket on a Sunday, or if you're sidelined by a severe illness like COVID-19 or cancer, TDI is absolutely your go-to. On the flip side, workers' compensation is specifically and only for incidents that happen while you are actually on the job. Mixing these two up is a super common mistake that can totally delay your benefits, so keep that distinction clear.
Moving on to Section 2, Checking Eligibility. Let's figure out if you actually qualify.
So the crucial point here is meeting both the financial and the medical requirements. To check the boxes, you gotta have worked at least 14 weeks in Hawaii, logging 20 or more hours in each of those weeks. You also need to have earned at least $400 in the 52 weeks right before your disability began. Medically, like we just talked about, it must be a non-work-related condition. And, this is super important, your inability to work has to be formally certified by a licensed healthcare provider, so someone like a doctor, a dentist, or a chiropractor.
And please, pay close attention to this detail because it's a huge relief for a lot of folks. Those 14 weeks of employment, they do not need to be consecutive. Actually, scratch that, they don't even need to be with the exact same employer. As long as you hit that 14-week, 20-hour threshold within the past year across any combination of Hawaiian employers, you meet the baseline requirement. Boom.
Okay, Section 3, Application Process. It's time to actually file your claim.
I know the TDI 45 form might look kind of intimidating at first glance, but it actually breaks down into 3 very simple, distinct parts. It's like a 3-piece puzzle. Step 1 is Part A, the claimant statement. This is your section to fill out with your personal info and the details about your disability. Step 2 is Part B, the employer statement, where job verifies your wages and employment status. And finally, Step 3 is Part C, the doctor's statement. This is where your licensed physician provides that essential medical certification we just talked about.
Now, while the core process is basically the same for everyone, your specific filing route kind of changes depending on your employment status. If you're in the standard private sector, you use that TDI 45 form and it goes straight to your employer's insurance carrier. But if you're state civil service, you actually use a slightly different form called the HRD TDI-1, and you submit that directly to your department. What if you're unemployed but recently separated from your job? You still use the TDI 45, but it goes over to the Department of Labor and Industrial Relations. Rule of thumb, always confirm with your HR department which specific route applies to you.
All right, Section 4, Overcoming Hurdles. Let's make sure you avoid the common pitfalls.
So, what's the biggest hurdle? Honestly, it's bureaucratic delays caused by incomplete paperwork. Failing to get your doctor's actual signature in Part C is a massive roadblock that stops everything in its tracks. Another really common mistake is simply waiting too long to tell your employer that you're disabled. Communication is literally your best friend here.
Tell your boss immediately. Make sure your doctor physically signs the form and double-check every single box before you submit the whole shebang. Remember, missing information equals missing money. Moving right along to Section 5, what to expect after. Let's break down the timeline.
Okay, so Hawaii TDI has a mandatory 7-day non-payable waiting period. That simply means you do not get paid for your first 7 days off work. Your financial benefits actually begin accruing on day 8 of your disability. But look further down the timeline, notice that 90-day mark? You have an absolute maximum of 90 days from the start of your disability to file this claim. If you miss that window without a highly valid, well-documented reason, you completely forfeit your benefits. So don't drag your feet on this.
But hey, what if you do everything right, you cross all your T's, and you still receive a denial letter? Don't panic. A denial is absolutely not the end of the road. You have exactly 20 days from the date on that notice to file an appeal. You can empower yourself by submitting a written explanation of exactly why you disagree, backed up by hard evidence, things like payslips or check stubs, directly to the Disability Compensation Division.
Finally, we've made it to Section 6, Resources and Tips. Some final best practices. Let's run through a rapid-fire checklist for success. First up, notify your employer the very moment you know you cannot work. Second, even though you technically have 90 days, you should really aim to submit your TDI-45 within 30 days to avoid any frustrating lapse in your income. Third, you've got to maintain continuous medical care. Your benefits actually require ongoing certification from your doctor. And finally, if your employer pushes back or claims they somehow don't have a TDI policy, contact the state's Disability Compensation Division immediately. They are quite literally there to enforce your rights.
Real quick before we finish up, I just need to note that this explainer is strictly for educational purposes to help you understand the source material. State laws and personal circumstances vary wildly, so please always consult with a legal professional, a financial advisor, or the Hawaii Department of Labor for personalized advice that is actually binding to your specific situation.
Navigating state disability can feel like a total maze, but you definitely don't have to do it alone. So, what has your experience been like applying for state disability in Hawaii? Did you run into a hurdle we didn't mention? Or maybe you found a clever shortcut that worked perfectly? Hit the comments below and share your story. Honestly, your experience could be the exact piece of advice someone else needs to get their claim approved today. Keep learning, stay focused, and I'll catch you in the next explainer.